Hello and welcome. And my name is Konstantin Kogan, and again, I'm your host at Holistic Investment, and it is my pleasure to host today Richard Byworth, CEO of Diginex. So Richard has a great journey from BNP Paribas, Nomura, and other great companies. And now he's a CEO of the company that was recently listed on Nasdaq and has Diginex is like as a group there's a part of investment bank, exchange, custody, and a lot of other business lines that we're going to talk about today. But before we jump in, so I have to throw a legal disclaimer as always. So this content is for informational purposes only. You should not construe any such information or other material, legal, tax, investment, financial, or any other advice. So hi, Richard.
Hey, Konstantin. Thanks for having me. Great to be here.
Nice to have you here. And again, like we met before the COVID era. Now, like you're in Hong Kong, I'm in New York, and it's a great pleasure. And I know you have some exciting news with Diginex. But before we jump into the news, I just wanna for you to share your story. How did you end up in crypto? Because I know you have a tremendous career in traditional finance, and then I'm happy to talk about your latest updates.
Yeah, sure. So thanks for the opportunity again, Konstantin. So look, I started my career in investment banking. I was a trader in London, and I transitioned pretty quickly into sales. So I was running distribution for Nomura across various different products. And at about the time of the financial crisis, I got to a point of real concern around money printing and what we were doing or what we were able to do to really hedge against what was happening to our money. And so I started buying gold. A few of the guys on my desk were talking about Bitcoin, but they certainly weren't talking about it in the context of wealth protection. And so I completely ignored it, unfortunately. But what I ended up doing was just reading a book, Sapiens, about the subject. And it was about many things. It was about societal frameworks and beliefs, and it really impacted a lot of the way that I thought about the world. And I'd been a little bit concerned about some of the changes that were happening in the world. Brexit was the one that affected me the most directly. Suddenly my passport wasn't a European passport anymore. And yeah, it just had thrown up a lot of questions. So I'd read this book, and it was just a very meaningful moment. And one of the things that it talks about is the construct of societal belief around money, and how it's a belief system, and it's just really what creates the best transmission and store of value. And it talks a lot about Bitcoin. And I just didn't understand why this book was talking about Bitcoin in the context of money. For me, it was just like some scammy internet currency, and I hadn't paid much attention to it. So at that point, I started reading about it more broadly, trying to understand what it was, and just completely fell down the rabbit hole. I remember in May of 2017, just announcing to the whole trading desk, everybody needs to buy Bitcoin. We need to buy Bitcoin. We need to get as much of it as possible. And it was about $1,000 US at the time. And I remember I'd gone away on holiday, and I'd come back and I'd said to my grad, I said, look, did you buy everyone Bitcoin? Did you sort it all out? Because, you know, we'd given him the sort of the tech guy positioning to be able to work all of this out. He's like, I didn't think you were serious. So by that time, it had already run to about $3,000. So we're like, right, okay, we've just got to do this ourselves. And so, yeah, got very heavily involved. Then I invested in Diginex. Diginex is was back then, it was a cryptocurrency mining business, and I'd invested it really as a yield play on the asset class. And then when I left banking, I was actually joining a venture capital firm. But the founder of Diginex approached me and said, look, do you think you could help me come and build a financial services firm for this massive opportunity that I see around blockchain and its related technology and the asset classes being produced by it? So we sat down and we fleshed it out, and today we're at a point where we've got the full ecosystem across everything. So, we started with the premise that we needed an investment bank, actually, because it was at the time of everyone doing these ICOs and like, look, this is just really bad. This is going to get the industry shut down. And we need to have proper advice and clearly position these things as securities and operate as an investment bank where we originate deals, we distribute those deals, and we offer people the opportunity to have transmission of those securities in digital form rather than paper. And so that really started the first pillar of what we ended up building. That's Diginex Capital today. Diginex Capital is a securitization advisory firm that rather than go to all our investors and say, hey, you need to be buying digital assets, we actually changed the way that we position it actually quite significantly. And we position ourselves as a boutique securitization firm that offers securitizations and distributions thereof. But you also have the point, either now or in the future, of taking those securities in digital form. And I think that is a key way that we need to help drive the industry forward. For us, if you go to a Japanese pension fund right now and you say, hey, do you want to invest in a digital security? It's a really interesting security. These are all the attributes, and it's digital. And they're like, well, what does digital security mean? You go, okay, what's a blockchain-based security? Okay, what's a blockchain? Well, it's a distributed ledger, and you can have different types of blockchains and different protocols. And they're like, what's a protocol? And just basically you end up with all these series of questions. It's like, look, I'm just not interested. This is too hard. And so you get to a point where even if you converted that portfolio manager, you'd end up having to get him to convert his entire risk committee, his entire investment committee, and maybe even his board. So it just falls into the bucket of too hard. And I think this is the problem we have in the industry, is that everybody's just trying to push all these institutional investors off into the deep end and not really actually offering them a solution that they can take on board. So, that's always the way that we're thinking about it. And we're trying to actually help the rest of the industry focus on security tokens and digital securities in the same way. But sorry, you asked me how I got into the industry, and I ended up rambling on.
No, I think it's a great introduction, and I feel your pain. I'm not coming from the same background, but I'm facing the same challenges as you do, right? And so let's jump directly into your different divisions, right? So again, October 1st, this month, literally 2 weeks ago, right? You became the first cryptocurrency exchange to be listed on Nasdaq, and with ticker EQOS, and it's EQOS, just because I tried to find it, I mixed it with some other ticker, so just in case if people cannot find it, and we did the disclaimer, so it's not a suggestion to buy. But so you have different divisions, right? You have 4 major divisions, right? So EQOS, here you have which is an exchange, right? So Diginex Capital. You mentioned the securitization advisory business. And the custody business. So guide us maybe briefly on each division, on how they relate together, how do they work, and then I'm happy to talk about what value does it actually bring to the ecosystem.
Sure. So, first of all, we got to understand the way that we came at all of this was to really hit the broad vision of the organization, and that's to bring digital assets to the world. And when I say to the world, what do I mean by that? I mean it to everyone, from a retail trader through to an institutional trader. There's no reason why retail traders wouldn't want to have institutional infrastructure and structure around everything that they're trying to do around a brand new asset class. And so we felt very, very strongly that it needs to be for everyone. So at the center of it all is EQOS, our exchange. Spelled slightly differently to the ticker. We have a U in the exchange name, EQOS. But EQOS was really designed to alleviate a lot of the concerns that I think people have had around the industry. Even in the last 2 weeks, you've had Qcoin hacked, BitMEX charged by the CFTC, OKEx, I'm not quite sure what's happening over there, but if someone's been arrested, they have the keys. It's like Quadriga all over again. So you're in a situation where even those three fairly well-known exchange names, and two of them particularly, are getting taken down either by regulators or police or hackers. And all of these things are things that have stopped people coming into this industry. So, you mentioned the fact that we're listed on Nasdaq. For us, that was actually a really important requirement. By having that sort of level of transparency and oversight of, being an SEC approved company, being a Nasdaq listed company, and Nasdaq as an exchange is a regulator themselves. It gives that level of transparency and mitigates a lot of the concerns around some exchange practices that I think many institutions and retail investors have. And so, if you think from an institutional perspective, they're always going to be worried about reputation. You're never going to have BlackRock operate on one of these platforms because it's just like headline risk, don't need it. You're going to lose $500 billion of assets if they end up, getting involved in an exchange that gets hacked or has some regulatory issue. And then at the other end, you've got retail like, well, yeah, I really would like to buy Bitcoin, but I don't know who any of these people are, and I don't want to have my money stolen when I send it over to some bank account I'm not quite sure about. Generally, these are not bank accounts you've heard of in everyday life. And so by being that Nasdaq listed company that everybody sees under the scrutiny of Nasdaq, of the SEC, having to file and be very transparent about the way that we operate and govern our business, it just alleviates a lot of those concerns. And then obviously we've always been focused on regulation. So we operate in Singapore under an exemption under what's referred to as the Payment Services Act. So that's really focused on providing regulation to digital payment token exchanges, as they call them, and allowing the industry to really grow. Right. So it's a little bit more, while a very credible regulator, a little bit light touch in terms of allowing for innovation to grow. So we've always tried to work with regulators across the world, and we, in different aspects of our business, work with different regulators. I think then, obviously, for the exchange itself, making sure that you have proper institutional functionality. So, for example, if JP Morgan were to onboard to an exchange, they would need to have segregation of duty. They would need their operations team to have a certain level of access. They would need their compliance team to have a certain level of access, their audit team, as well as their trading team, their portfolio managers, CIO, etc. They want everyone to have different levels of access. Mm-hmm. No exchanges in this space offer that. We've actually built all of that into EQOS. It's all functional by sub-account, and you can have it all linked to different accounts. So this is just a basic requirement of institutions and something that we built from the very beginning. So it's really about trying to make sure that you've got that institutional tilt, but also providing retail that same benefit, right? In the same way, they get access to a regulated exchange, to a Nasdaq listed exchange.
So may I spice up our conversation, because you've mentioned very important topic that I was like doubting whether we should bring it up or not, but as you brought up yourself about the OKEx drama, like that is like, I think what it does, it exposes the entire weakness of the our industry, and the infrastructure of the industry right now. Like if you think about it, so we, OKEx suspended all the withdrawals, right? One of the top probably 5 exchanges, the crypto exchanges. So all the key holders, they've been out of touch. So, and what to me is a bit insane in this story. So I understand, so there are some legal complexities which nobody actually understands in details, because the jurisdiction is also a very big problematic story, because OKEx is based in Malta, part of it, which is part of the European Union, but they're also headquartered in Hong Kong, where you are, right? and with offices in Singapore and San Francisco. So, I mean, right now we know, according to some of the media outlets, that the co-founder, I think, Starzu, he's been released from the police in Shanghai, and it's they're continuing the investigation, but it's somehow moving along. But what is more important, and especially after also the BitMEX, which is the largest derivative exchange in the industry, right, and had similar problems with their co-founder, I think what it shows us that the irony that the industry that's actually is that is born in decentralized ethos, right, and dominated by centralized businesses and certain vulnerabilities that we see, they exist even in the world of multi-sig protocols, right? So how basically your solution is attacking those potential challenges that any exchange can be a part of, actually?
Yeah, so for us, I mean, obviously on the custody side, we have a separate group. So Digivault is operated out of London by a team led by an ex-Ministry of Defense security specialist. So for us, we have protocols and process that are handled in a way that it just reduces key man risk. I don't, as the CEO of the exchange, have access to any of the keys that we deal with. We're in the process of integrating our custodian to the exchange. And actually, we have multiple custodian offerings. So the idea is that much like an investment firm, you have multiple places to store your crypto assets. So you could go with BitGo or Digivault or some other that will integrate down the road. Yeah, that's one way. I think you raise another question, and this is an industry that's built on decentralization. And that comes back a little bit to what I was saying at the beginning around Diginex Capital, right? You can't just throw everybody in at the deep end and say, hey, this new decentralized technology can mean that we can decentralize anything. Because if you do want institutional participation, guess what? They don't have structures that allow them to be their own custodians. They can't do that. They need to have a viable third-party custodian. The way it works at the moment, it may change in the future along with the technology, and we often see that. You see technology lead, and then sort of society and structures adapt as we kind of get to that point. But at this point in time, at this level of nascency, we need to make sure that you have centralized organizations, but centralized organizations that you can trust. And that, again, it comes back to the Nasdaq listing and being focused on always building trust. So Nasdaq listing, being regulated, making sure that everybody comes from a background of understanding what regulation means, what it means to be a fit and proper person, right, in the eyes of a regulator. So these things are very, very core to the culture of Diginex and everything that we're building.
Yeah, and in our firm also, like Way Financial, as I mentioned to you before the interview, and like being an IRA, we have a fiduciary responsibility to choose only qualified custodians. We don't even have the luxury right now to work with someone who doesn't have this institutional grade security and compliance standards, right? So I think same exact choices. They're working for most of the firms who are trying to play with this bigger picture. But again, so if I would summarize what you just mentioned before, so there is no possibility that stories with like OKEx or BitMEX can even potentially happen with Diginex, right?
With OKEx and BitMEX?
Yes. So so with your infrastructure, there is no even opportunity that, like, for example, God forbid something happens, there's an investigation, or again, I don't wish you that, but I'm saying, like, even if that happens, just as a risk, as a systematic risk, right? So there is no option that you withdraw all the holdings of investors, for example, if I hold, like my crypto with you.
Yeah, no, that's not a concern. I mean, we have governance frameworks around the way that the keys are managed. But if I were to stand here and say that we have no risk of ever being investigated by a regulator, I think that would be a really foolish statement to make. We will always want to work with regulators as they seek to understand our business and they seek to understand the industry and how it can grow. But I couldn't stand up here and say that we're never going to have an experience with a regulator where, we're being investigated. That happens across financial services, as we always see, with the traditional space as well. And it's just a case of always trying to make sure that from the very beginning, we're informing regulators about what we're doing. If the business pivots or changes, the regulators understand that, and that we work closely with them in terms of sort of thinking about the way that legislation should be formed as this industry pivots and grows, because it's going to change. It's going to keep changing. We're brand new. We're so early with all of this. And I think certainly when it gets to the point of security tokens and digital securities, there's so much to assess. I mean, obviously the US have recently stated that they really want to look into tokenization, which is broadly securitization with digital securities, as we call them. So it's net the same thing. But I think that, yeah, we're always going to have to work with regulators and help educate, wherever possible, so that they can understand and they can understand how to format legislation.
Yeah, so no, I think that side is clear. So I want to jump to another important topic. So as I mentioned before, my previous interview with Michael Saylor from MicroStrategy, and I'm sure by now, a lot of folks know what that right now there's a publicly traded company in Nasdaq. They acquired $425 million worth of Bitcoin, which is about 28% of their entire market cap. And right now, as we're speaking today, it's October 19th. The worth of this portfolio of Bitcoin, which is 38,250, it's already $444 million. So,
do you have a monitor on your screen updating you as the value of Michael Saylor's portfolio?
I actually do. You're joking.
I could see you reading off it. I was like, okay, yeah, you've definitely got that.
No, I actually do, and I monitor 18 other companies. So there is two websites. One is BitcoinTreasury.org, and there is BitcoinTreasuryReserve.com. So one is just information, other more visual. So we heard some news from Square, acquiring about $50 million position. And there are other companies, right? Some of them publicly traded, some are one private company like Stone Ridge Holdings, and then other ETF companies like Grayscale, CoinShares, and others, 3AQ.
Yeah.
Now, my question to you is, it's still a drop in the ocean, right? The entire worth of this portfolio is about $7 billion, right? Which is, again, it's a big deal. I don't want to undervalue it. I have a huge respect for all the people who are doing this, because this is paving the entire road and structure for other companies to do it, right? But we have to see hundreds of companies to join the game, so that will become the bigger play, right? So what is your view on that? What's going to happen next, do you think?
I have huge respect for what Michael Saylor did, but I think he's quite unique in that he is effectively the controlling shareholder of that company. He controls the board as the CEO. So I think that he is able to move a lot faster than your average public company. And he himself had gone down that rabbit hole with Bitcoin, understood the wealth preservation qualities of it, and saw his cash pile, I think he referred to it as a melting iceberg in US dollars. And certainly I think, I spent a lot of time trying to wake people up to the fact that what is happening with COVID is changing the basis of the monetary supply that we've seen over the course of 40 years. So, over the course of 40 years, you've had a gradual increase in monetary supply which has been pretty painful in inflationary terms. If you're trying to, buy a house or buy a highly valued asset that people generally tend to fight over, and scarce assets exist. If it's anything from high-end education through to a nice penthouse apartment in Manhattan, these are effectively also scarce assets, right? That people will fight over and pay more and more higher prices for. So when it comes to Bitcoin and your question around how do you reconcile what is going on with monetary supply increases and actually say, how am I going to protect my wealth? Bitcoin actually often becomes one of the only answers, because it is such an easy asset to move around. It has attributes far better than even gold, and it has that sort of same store of value attribute that more and more people are starting to recognize. And back to societal beliefs and belief systems and constructs around money, the more people that believe it, the more it becomes a reality. And so I think that to your question, where does it go next, or how do we want this to go next? I think it's more a case of just trying to make sure that people that are at risk of losing all their wealth understand what a proposition Bitcoin is in terms of preserving that wealth. And that's, I get accused of being a preacher sometimes by my friends and family. I'm sure everyone in the Bitcoin industry does. But it's because, I really want to make sure that people have an understanding of this. Not just like, I get asked all the time, should I buy Bitcoin now? I'm like, you should be buying Bitcoin constantly. Like, that's my answer to that question. It's not a price point. It's not something that you're going to go, okay, at 5,000, it's a better trade than 10,000. Well, sure, yeah, it's a lower price, but effectively, you still want to be acquiring now as much as possible, because this COVID response, this central bank response to this pandemic is just coiling the spring of all scarce assets. And Bitcoin, I think, could end up flying more than anything.
So if you were to list like top 3 reasons why do you think Bitcoin is the perfect treasury asset, what would that be?
I think that you've got the first truly scarce digital asset. It's, in terms of network effect against any other perceivably payment token, it destroys everybody, like complete destruction. Like it's just gaining network like a black hole all the time. You look at hash power increasing constantly. You've got more and more wallets increasing. You've got Bitcoin flows on exchange dropping, like getting pulled off exchange wallets. I would say that more and more people are getting to the point of realizing that this is the way to store value. And so you're going to have a situation where it becomes highly competed over. And the only thing that happens to something that is truly scarce when it gets highly competed over is the price goes up. And that brings it into probably the third point, is around game theory of price, right? The price going higher actually drives more and more interest in Bitcoin. There's a meme across Twitter called NGU, number go up, but actually it's very powerful. And I believe it very strongly that, I watch Bitcoin go up, I panic. If I watch it go down, I'm going, great. But if it goes up, I start panicking. I'm like, I just don't have enough.
Yeah. No, there's another argument that I want to bring up, and I heard it from some of my friends who I'm also trying constantly to explain it to them, and they're from traditional banking space. And they tell me, listen, we respect you. We know, you guys are doing a great job. Bitcoin, I would buy it just for fun. But again, like I say, if you're talking about allocating like billions of dollars, like with an industry that is highly manipulated, right? And somebody can short the market like easily, like someone who holds, let's say, even 1 to 2%, the market, like can manipulate it with derivative strategies. So my question to you, like, how would you, I would say, rebuttal, this argument saying that like it's still like relatively small market cap, like, and we know that it's not gonna die anymore. Like it's still like it's already this level of dominance, that the one that you explained. However, it is still under risk of being manipulated, and if even a few, let's say, a few more companies will like acquire like a big portion of Bitcoin with a 100-year view, as something like Michael Saylor style, right? They could have a hard time, like, and if somebody manipulates price on a short term. On a long term, nothing happens, right? If that's their bet and they're having like this risk, I'm sure they discussed it. But how would you explain this portion?
I explain it as, yeah, it's definitely being manipulated. And it's being manipulated because you have so much bullish news happening and the price is barely moving. And I think that the reason for that is it's the same trade across finance. I'll never forget one of my biggest hedge fund clients. He called me one day, and I've been trying to buy this convertible bond for him for months. And he calls me up, he's like, Rich, I need you to sell $500 million worth of this bond. I was like, what are you doing? He's like, you got to sell it to buy it. And I didn't completely understand what he meant by that until I started trying to talk to everybody in the market and say, hey, you know, like I've got a sizable seller of this bond. You know, what would you give me some sort of bid? I want to try and maybe take it down in clips. And be like, actually, how big? $500 million. Oh, okay. Add me to the sell. And if you get a buyer, let me know. And yes, price manipulation. And this is what big buyers do. When they're trying to buy something, they'll just go and say, right, I'm going to smash the market and just flush out all the weekends because I want to buy it. And so, yeah, it is being manipulated. That's my answer. Okay. It's being manipulated because the institutions want to buy more of it.
So you don't foresee that one big institution can actually try to create the bearish trend to buy more, right? You know, like, and like for a short period of time.
Yeah, look, I think there will be hedge funds that come into the space that are extremely sharp at doing that, and that they will do that. And I think it's probably already being done by some of the whales. You know, they get to see a lot of the flows, a lot of what's happening. Many of them run their own exchanges, and so they see. And you know, they come from trading backgrounds, and you know, many of the institutional guys that came here first are traders, right? So it's interesting. The one thing I'd say to your friends, as I say to my friends, is do not buy this if you're just buying it for a punt, because then when it does go down, you're going to sell it.
Yeah.
But when it goes down, you need to be saying, this is great, I can buy more.
Yeah, I 100% support this logic, right? So, but to close this particular topic, so at what point do you think, like at what size, market cap size, you know, they will be so stable enough so there will be, like, it will be hard to manipulate it? Let's say like the milestones over $1 trillion market cap or $10 trillion market cap, right? So what is your view on that?
I don't know. I mean, you look at what happened in London LIBOR markets with the FX market.
Yeah.
How big are those markets? It's a how long is a piece of string question. I don't know the answer to that. I think general financial markets are manipulated every day, and you know, big hedge funds that want to participate, that's what they do. You know, they're there to squeeze out profits every way they can. So yeah, I don't know the answer to that question, Konstantin.
Yeah, that's good. I think here I actually respect you more because it's a rhetorical question. So I thought maybe you bring some context to it, because I do agree that there's no good answer, because the people are trying to find this easy explanation, you know, like it's going to grow to a certain degree and then we're going to feel safe. But there's no safe harbor in the money market. That's the thing, like, you know, too big to fail, especially in the current situation. I don't think it's a viable solution right now with anything. Like with our economy, $27 trillion like in debt, like, do we understand when the dollar is going to fail, or is it already failed? We just don't know about it, right?
Yeah, I mean, that's a whole different can of worms. But I mean, the one thing I would say is that you're going to see, as this grows into, more hundreds of billions and then eventually trillions of dollars of market cap, one thing that will diminish is volatility. So I think that in itself will be a much larger factor in helping institutions get comfortable. I mean, I often do presentations to wealth managers and investors about why they should be buying Bitcoin, and the biggest point they always highlight is volatility. And I think when we see a diminishing of volatility, then you're going to get a much larger overall allocation and adoption, and that will be when it's higher, and so it will all play to itself eventually.
Yeah. The volatility is, it's a big factor, and a lot of folks are talking about is if it's something crazy what they don't follow. There's I follow quite often also Mike McGlone, and senior commodity strategist in Bloomberg Intelligence, and he recently posted some great numbers, like how actually how the volatility factor right now is in Bitcoin is actually decreasing. And if we actually compare apples to apples and not just talking about myth in the industry, like it is decreasing tremendously. And I think it will decrease even more.
Yeah, exactly. And I think, but still, because it's so early, people always look back at those early periods and be like, yeah, that's just crazy, and dismiss it on that basis, and they'll continue to dismiss it because they want to dismiss it. And I can't tell you the amount of educated, smart investors, some of them leading some of the world's largest financial institutions, saying, well, I don't understand Bitcoin, or Bitcoin's a scam, and still saying this sort of stuff. And I'm like, have you even read the white paper? Have you even looked at this? No, I don't have time for that. Yeah.
Again, which is fine. It's their choice, and I also respect people who would say that I don't understand it, and at least like they're open-minded to learn, as opposed to people who are just they're hypocrites and they're trying to throw some myth which they don't exist. And we've seen a lot of fireside chats, like with top advisors in the industry. I don't want to put exact names, but we all know about the difference between Bitcoin and gold, the difference between like a store of value. And, logically, if you listen intellectually to the arguments of, let's say Eric Voorhees, right? So you do understand that he's correct in all terms, and he's almost like winning, if that's the word you can apply to the conversation. But the other topic which I want to discuss with you is also so Diginex Capital is a boutique investment bank, right? And you talked about the securitization aspect of your advisory, and distribution arm. And we've heard recently, some big news about the Kraken that has received the first charter bank license in Wyoming, which is great news for the industry. So I know you are under the FCA, the UK regulator, right? So guide me a little bit, so what's the next step for this, for this business line?
For Diginex Capital, the investment bank. Yeah. So for us, we're in the process of getting licensing from Dubai. So Category 4 licensing in Dubai, which allows us to do same activity as we do in the UK under the FCA regulated entity. So that's corporate finance, that's distribution of securities. A lot more of the distribution side will be handled through partnership. So it's unlikely at this point in time that we'll be going globally around the world looking for licensing, but certainly origination can now be done obviously in the UK, but also soon to be in the Middle East as well. I think that's quite key. We have yet stayed away from the United States, really wanting to, we don't onboard any US clients to our platform anywhere. So we are trying to get to the point of understanding how the regulator is going to move forward. Obviously, you've got state-by-state regulation in many aspects of the business. You got FinCEN, SEC, CFTC, everybody getting involved. And so I think that until such time that we get real clarity around a way or a clear path to move forward, or a roadmap to move forward in the US, you know, any work that we would do in the US would be purely on an advisory basis, or in partnership with other license holders.
So let me ask you, I'm sure you've looked into the Kraken like news, and they've published, you know, several explanatory notes and you know, the papers, you know, how did they go through the regulations and the pound the payment, like Caitlin Long and her group, and the, you know, basically like the state also regulators, they did a great job for several years. So have you looked into, let's say, Wyoming as an option, right, for you to even explore this route?
Yeah, look, I mean, we're operating in various different jurisdictions with various different regulators at the moment. As I say, the US it's not on the roadmap for us at all at this point in time. But yeah, look, we operate in the UK, Switzerland, Hong Kong, Singapore. So all of those jurisdictions, plus Dubai as well now, coming down the road. So we certainly have our hands full with different regulators globally. As I say, US it's not part of the immediate roadmap. We're starting to put boots on the ground around research and strategy in the United States. But that will take a little bit of time to percolate through until we can start offering our services to US clients.
Yeah, and as I remember, also you have operations in Vietnam and France, even and Puerto Rico. So Puerto Rico, can you elaborate on this part, because you know Puerto Rico is very is very connected to US, as I'm sure you know, right? So
yeah, so we have some marketing team in Puerto Rico. We are in Vietnam. It's pure development, so it's nothing financial services. It's just on the dev side. Where else did you mention? France, I think, is just someone who lives cross-border with Switzerland.
Mm-hmm. And Vietnam.
Yeah, Vietnam is one of our development hubs. So yeah, there's some amazing talent down in Vietnam. We have actually our Vietnam office is a really fantastic team. Got a really great energy down there, and we've managed to really put together some fantastic people. So I think Vietnam will continue to expand for us. It's a very, very solid jurisdiction. A lot of very talented developers as well.
So the only thing which I want to also clarify, because after the news of your Nasdaq listing, which is again SEC approved, and people might think, well, you're saying that you're not interested in for now, for this particular moment of time in North America, or specifically in the US, right?
I didn't say we weren't interested.
Well, let's say it's not.
US market's a very important market, but yeah.
Sure, but it's not your focus for now, right? To be regulated specifically, right? So why? Well, people might ask you. So why then list a particular Nasdaq? Because you can list in Toronto Stock Exchange or some of the European exchanges. So let's see.
Where else are you going to list a technology company? Where's the world's leading technology exchange? Nasdaq. All day long. There's no other option. Yeah, US is forefront of many things, right? And the only reason, and I will reiterate, we're very interested in the US market, and I think that there are a number of clients that would be very, very keen to onboard to EQOS and onboard to Diginex Access and even onboard to Digital. But it's not something that we can achieve in the immediate term. Yeah. So we've got to be realistic. You can't do world domination in just a year or so.
Yeah, which is great. I mean, you can. I'm sure you, as you mentioned, you can do it. You can accomplish it through partnership with some of the entities in the US, right? And there's a lot of opportunities for joint ventures, etc. So, just wanted to clarify this particular angle, right? So, Again, so if you want to talk about a little bit like more and deeper and about EQOS and like about the compliance, the fairness, the trust, the innovative like aspect of it, and as a summary, I want you also to surrounded by like what value does it bring to the ecosystem, because people hear another exchange, right, or out of 1,000 other exchanges. So what's the differentiator?
Yeah, look, I think the key thing to understand about Diginex is the ecosystem value. Like it's all accreting to making that EQOS experience number one, right? You have a custodian that's been built to Ministry of Defense standards in terms of cybersecurity. So tick box for institutions getting comfortable, right? First of all. And as I say, that's getting plugged into EQOS as we speak. You've got an asset manager. Now, this is really important. So our asset manager is actually operating a fund of funds. So our fund of funds invests in crypto asset managers across the industry. And over the course of the last 2.5 years, we've ended up establishing contact with 250 different funds in the industry. So we've collated a lot of feedback about the issues they're having around settlement or capital efficiency or collateralization that's efficient. All these sorts of things have actually helped us design EQOS for the asset managers that have been operating in this space for so long and saying, these are our problem spots, right? And obviously having trust and security is a very, very key part of it. So all of that, a lot of that was informed by what we started building all the way back in January 2018 with that asset manager. And then you come over to Diginex Access. So Diginex Access is just a phenomenal platform. It's a multi-venue trading platform that plugs into two of the world's largest portfolio management systems. So those are trading technology companies, FIS and Itiviti. These are huge, huge institutional trading system companies. And what is amazing about this is, it provides an amazing on-ramp into crypto because they've actually, for the first time, got a crypto trading platform that's integrated into their PMS directly. So any hedge fund could go to FIS and say, hey, I want to start trading Bitcoin. How could I integrate that with Front Arena? Already done. Here's your trading platform, Diginex Access, right? So we have that partnership with both. That gives the user access to not just EQOS, but to Binance, BitMEX, Coinbase, any exchange they want to use. They can just sign up with, get the API keys, and plug in. And we've done all the integration already. Mm-hmm. So we're integrated with the majority of the major exchanges, but obviously also EQOS. So again, as a smaller starting exchange, we get past the whole integration problem. So we just give institutional users Diginex access into EQOS directly. So it actually gets around a lot of the integration issues. And so again, it's just plugging in everything faster and quicker into that exchange. And then obviously it's also that future trade when you think about when eventually institutional managers become more and more comfortable with blockchain technology, with booking digital assets, and they go, okay, actually now I want to start trading these things. Well, at that point in time, EQOS will develop into a security exchange as well, digital security, and then you'll have that full marketplace. And then with that custodian integrated, you have borrowing and lending around the whole platform. You have all the derivatives around it. And effectively, that becomes your private bank, or whether as a retail user or a prime broker as an institutional user. So you just pull that whole ecosystem together. We've been obviously designing this over a few years, and we're really excited that now it's all finally come together and in perfect timing with our Nasdaq listing.
Yeah, and it's impressive. So I've also read somewhere that it's the solution is your matching engine is as robust that it can handle more than 100,000 transactions, per second, right? So that's with the API and REST API keys, and you do support, as I understand, you also support WebSockets and
every API possibility. Fix 4.4, which is the institutional usage. So all the banks, all the hedge funds, all the private banks, they all connect to each other in exchanges via a Fix 4.4 API. And we're one of the very few exchanges that have offered 4.4. So actually most of the institutions onboarding to us are already using the fixed connectivity.
And this is, I think, one of the most important aspects. And specifically, I was trading futures myself, and I have a lot of friends who are still working in the high frequency trading world. And for them, nanoseconds matter, right? For them, it's not like just a second; it's nanoseconds.
Yeah.
Those connections are vital. And I mean, not to criticize a lot of other big exchanges. They're doing derivative, but there's only 5 biggest that. Everybody knows them who are trading in this market. So they don't have those institutional grade, WebSockets and fixes and and this is a big problem because they're losing those nanoseconds. They're losing a lot of arbitrage opportunities. So my question to you is basically for this particular audience, right, who are traders and they're playing the still the market is still open for a lot of arbitrage. Good place, and how are you looking to cater the derivative market in the future as well?
Yeah, derivatives are very clearly part of our roadmap. So we launched perpetuals this quarter. We're launching options, full suite of options next quarter. And so it's really just about making sure that you've got all the infrastructure in place to accommodate that. I mean, it's back to that portfolio margining, right? You don't want to be going long an option and short the spot and getting stopped out on one and not on the other, and then you end up with delta risk that you can't handle. So what we have really done is make sure that everything's in place to accommodate all of that in the very beginning. And when you get that collateral base of your digital assets stored within the platform that you're using for financing, borrowing and lending, getting an interest rate on your Bitcoin, and then being able to leverage that as a collateral base to trade derivatives or to do all sorts of other things around the product set, then really as I say, you've created this prime broker or this private bank. So yeah, derivatives very much center of our roadmap.
So there's third quarter, right? That's when you release the derivative. Yeah.
So our year ends at the end of March. So our third quarter is this quarter.
Listen, we're looking forward to it. That will be another way how we can cooperate. So, so this is incredible. And I'm sure we can talk about it for hours. So I as one of the last points, I want to ask you personally. You mentioned *Sapiens*. I love this book as well. Yuval Noah Harari. I think I've read all of his books, right? And maybe you can name some other books that actually inspired you, and if I may ask you, even if you were to pick one other book than *Sapiens* that actually impacted your life tremendously.
Impacted my life tremendously. I would say nothing impacted it in quite that degree. I read the book, what is it called? The Price of Tomorrow by Jeff Booth. Have you read that book?
No, I did not. I've heard about it, but yeah.
So it's a very good book. It talks about basically the fact that deflation is our only answer. And the fact that everything that's happening in technology is massively deflationary. And this is obviously really accurate. We see this all the time. But the way that governments are trying to address it is actually by inflating the money supply to a degree that you actually do get inflation, right? But the problem is that it's not focused on those goods in the CPI basket. And so you you're just ending up ballooning the cost of school fees or that penthouse apartment in Manhattan. And I think unfortunately that there's another aspect to it, and there is the fact that all our governments have such huge amounts of debt. And so the idea of actually, allowing technology to deflate to the degree that it would, that is just completely unpalatable, because the debt burden would be too great, and then you're going to have a huge debt crisis. And so I think that, monetary-based inflation is the only way that we're going to go. I wouldn't say that particularly changed my view on things. That really validated my view on things, but I think it's a very important book for people that are trying to understand what is actually really going on and where we are in the point of the world around technology, and the way that technology is compounding to such a ridiculous degree that the world that we are going to live in 10 years' time, we can't even imagine what that's going to look like.
Yeah, and maybe as a closing point, maybe three people, they may be with us today or may no longer be with us, right? May become philosophers, economists, whoever you decide that actually also inspired you in your life.
Yeah, I went on a sort of a mindset and leadership training camp a few years ago, and the guy leading it, he said, what you should have in your mind is a board. You have a board of directors of people that you consult around your life, and what you have to imagine is how they would react to certain things that you're asking them about, what should I do about my marriage? Who would you consult on your board around that? Or what should I do around my business, and who you would consult on that? So on my board, I think I can remember three for sure. I had Elon Musk, certainly as an entrepreneur, wanting to consult him around the way that we built the business. But it's definitely, he's just phenomenal in terms of what he's done, and an inspiration to so many people that anything is achievable with determination and relentlessness, and an understanding of the basics of physics and these sorts of things. I think Barack Obama, not particularly because I favored his politics, but just in terms of the way that he was able to articulate his thought process and the way he spoke. I think he was probably one of the greatest articulators that I've ever seen in politics across the world. I think he was a great speaker, and he was really able to clearly always articulate his message in very succinct but clear points. Who else? Warren Buffett. Warren Buffett, even though he doesn't believe in Bitcoin, I think that his investment process is extremely solid and must be respected.
Yeah, it's a great pick. So I really appreciate your time, Richard. I think your insights are incredibly valuable. I think what you are doing with Diginex and the entire team, I know a lot of your team members as well, and it's really important. And I wish you that you continue with all the milestones on your roadmap, and that you will, even help more with education, proliferation of digital assets, securitization, and eventually, which will end up and the inflation-resistant asset that we are all benefit from, right, as an industry. Thank you so much for all your efforts.
Yeah, and more broadly, I hope for the benefit of the world, we can achieve our vision of bringing digital assets to the world. Look, thank you again, Konstantin, for having me on. It was a pleasure.
Yeah, likewise. Thank you, Richard.